you doing? Well, it happened again. I got up early enough to watch the market open, which is three times this week. And I haven't done it three times probably since 2008. So that tells you how unusual this week has been. Pretty intense, right? Go from record highs to a correction, down 12% inside 5 trading days. I've been watching the market this morning bounce from between 750 points down and over 1,000. So I think it's time, we kind of have that talk, if you know what I mean. I told you yesterday, and I've told you 3 out of the last 6 or 7 Fridays, I expected Friday to be choppy. I think what we're seeing with this particular event is nobody wants to be long the weekend, right? Which frankly makes sense. We've seen some pretty big spikes, last week being kind of the one that started all this. So I think that holds true today. As I said last night, I expected a down morning. We got that. You know, I think the close. I think the close is going to be important because I think what we saw this morning is the first, what I would call the first kind of crack. I think we're starting to see fear come into the market, and I wanted to talk about that today. I think the first 3 or 4 days, I think it was an orderly repricing of assets, which makes sense. I think it is pretty well known that the first half of 2020 is not going to be what we expected. This black swan came out of nowhere for the most part, as black swans do, right? If you haven't read the book, read the book. It's I guess it's probably 10 or 12 years old. Hi Hector, good morning. So realize that the first half of 2020 is not what we were going to be expected. And where I was going with that is the first 4 days of this repricing kind of felt orderly. What I started to see this morning is a little bit of fear, and that's just sell anything, sell everything kind of trading. And it's going to be interesting because I think the close is going to be really telling. If the last half hour we have a swing up or down, 300 to 400 points, that'll tell us where we are, right? Are we putting in a floor, which will mean we'll trade up, or does it crater and look for a new bottom? That will mean that fear is taking over. It's going to be the close that is the most telling for me. But I want to talk about this weekend for you. This week it's been bad, without question. I've been telling you every day for the last, I don't know how many months that we've been having these conversations, that the stock market was getting a little stretched. And if you were uncomfortable with what you had invested in the stocks, take a little off. If we're honest with each other, most of you thought I was crazy because you were winning, right? You were on the winning side of the trade. The stocks were melting up and everybody felt like a genius. Well, I'm going to guess that a lot of you don't feel like a genius today and you wish you would have done this and wish you would have done that. I've been there, right? I share my story of a similar trading experience back in 2000 all the time. I get it. It's human nature. But take this weekend and start to understand what we know and then what we think. What I mean by that is, what do we know, right? We know that this is a highly contagious thing. We know that people are being quarantined. We know that group events are being canceled all over the place, right? I just saw yesterday or the day before, and I forgot to talk about Facebook canceling its largest event. We're going to see more of that. It frankly wouldn't shock me if the Olympics in Japan are delayed from July to September. Wouldn't shock me at all. And that can come out of nowhere, and that'll send some shockwaves, right? It is, again, so that's something we know, right? We know that the first half is going to be messy. Is it going to be The Walking Dead around here? I certainly hope not. Certainly don't think so. I mean, is it in the realm of possibilities? I don't know. Maybe in your craziest thinking of what's possible. But in general, these things will work themselves out. This thing should be resolved sometime this year, whether it's the summer weather that kills it or one of these tremendous biotechs creating a vaccine that they're working so hard to do. Something will come away eventually, and this thing will be put down. And then we can all spring back, right? This doesn't feel like the Great Depression coming. I thought the '08 crash could have been the Great Depression. But this doesn't feel like this. This feels like a shock to our economy, and I'm talking about our world economy. We have whacked demand, right? I think GDP is going to be down for the world, right? Most people aren't saying that. People are staying home. we People are staying home in countries that don't have the virus yet. So I think it's going to be bad, but it will only be bad for a very defined duration. So if you are investing and you still own stocks today, you need to ask yourself, do I need the money this year? Or can I just hold my nose and wait till 2021? Because I think 2020, we're now almost in March. It's going to be a rough year. We're going to see some unnatural swings. But if you don't sell and this oddball thing removes itself because it's cured, the economy should be back to picking up and will be spring loaded, right? Because there is some demand not happening today that will be, later. So you need to take this weekend. You need to calmly ask yourself, where do you need cash, if anything, this weekend? If you need cash in the next 3 or 4 months, you have a hard decision, because the stock market could be a lot lower in 3 or 4 months. But it also could be higher. That's why it's a tough decision, right? The Fed comes in this weekend, next weekend, the weekend after, and whacks interest rates 50 basis points. The stock market will roar higher. So if you need money, you need cash, right? You're buying a home, your kid's going to college, you got to write that tuition check. You're buying, whatever reason you need cash. You probably have a very tough decision between now and the end of April, maybe the end of May. It's tough. I don't know what to do. If you need money October, November, December, I would think the market's kind of healing itself back then. And if you know anything about stocks, it is a forward-looking asset. I read somewhere, I think it was Jeremy Siegel, said that 90% of a stock price is the future earnings of a company 1 year out. If that's true, and if history holds, if you need cash in October, November, December, it might make sense to hold, because you'll start to getting earnings and valuations from 2021. If you need the money years down the road, it might be one of those times that says, hey, I missed selling at the top. We're already 12% lower. Could it go another 10, 15, 20% lower? Absolutely. But you know what? I don't need the money. I'm going to hold my nose, stop looking at my stocks, and I'll come back in 2021 and see where the economy is. That's, you don't lose unless you sell, right? At least in stocks. And that's where I was always wrong. I was an emotional trader. Like real estate, I look every day. I looked at my stocks every day, and it ate me alive. That's why I know I'll never own stocks again, because I don't have the mentality, right? I have this maniacal focus in looking, and the whole market risk, sector risk, company risk just ate me alive. So I'm far more interested in the steady assets of real estate. It's an illiquid market. I can't just emotionally say sell it, right? Because it takes time and inspections and all of those things. So in the end, I wanted this call to be about controlling your emotions. And just so you know, I don't know, this is going to sound weird, but do you think this? I'll get to that in a minute. I'm going to go there next, I think. Thanks, Gustavo. I don't know if you guys know this, but one of my subscribers is actually my mother. She looks at these videos every day, and she called me yesterday and said, "You need to have a conversation about risk and about emotions." So, Mom, if you're still watching this, this video was for you. I think that's hilarious that my mom watches my videos. It's so funny. But anyways, let's talk about Gustavo's question. Does this affect the real estate market? That's why I look. So, Gustavo, this is what I think we need to figure out. This virus is clearly changing consumer behavior. So, where might we see that in real estate? We're going to see that in open houses first, right? So, that is going to be something that I think is interesting. Is we need to see what is happening at open houses, because we know how they've been the last couple of months is open houses have been fairly active, right? We have no inventory. Stuff is selling very quickly. I'm going to be looking for any data points. And if you're a real estate agent or you know real estate agents holding open houses in March, I want to hear from you. Awesome. Let me know what you find out, Alex. That's the kind of stuff we need, because that's going to be the first crack is open houses. If people are so nervous that they stop going to open houses, which may have 5 or 6 people at it that they don't know, that will tell you something. Right? If open houses suddenly are crickets and no one shows up, real estate's, first what would happen, right? Inventory will grow and eventually prices will have to be cut. That's what will happen. But if people are still going to open houses, maybe they're going and maybe they're wearing masks or something. People are wearing gloves. This event is going to be probably good for them, because the cost of capital, the cost to borrow, they're going to get an unnatural haircut, right? Their mortgage payments will be $50 to $75 less for the rest of their 30-year mortgage. So for the most part, real estate will be fine. But why am I following the consumer? Because they're my competition. I want to know what they're doing. If they stop going to open houses, I'm going to buy a lot more houses, right? What have we been looking for as real estate investors? We want supply to go up so that we can buy stuff cheaper. I think 2020 is going to be a year where we can unnaturally buy a couple of deals that would normally not be there. So we can buy better quality for a cheaper price and get low fixed rate debt for something that won't be around in 6 months. And then we'll have that artificial spring that will just explode higher. So I actually expect open houses to be less active, but I don't know. That's why I think it was Alex that said he's going to 5 open houses. I'm going to love to know the answer to that, next week. So let us know, Alex. All of us should be asking that question, because that's where the crack will be. And I would say the whole month of March, right? Because maybe early in March, 3 or 4 people show up instead of 10, and then maybe by the end of March, nobody shows up. That's the kind of data that I want to know. So in the end, let me get back to my notes. That whole conversation was for my mom. If she's watching this, you got it. I think it's hilarious that my mom watches my videos. It's so funny. So the market's been bouncing around, right? 750 to 1,000. Again, I think this is a one-time shock. It's pretty crazy. We definitely need to watch and calm down. I think you take some time this weekend to figure it out. There is a untold ugliness of this. There are a lot of companies that have bad balance sheets, right? There's not a lot of cash on the books. So I think what's going to happen is there'll be some companies that could have tried to limp along that are going to be shot in the head in the first 6 months, and they're going to be bought by someone else. I think this would be time companies like Warren Buffett. I bet you Warren Buffett, oh God, here's a guess. Between now and June, Warren Buffett makes 2 significant acquisitions because he's got cash. Anybody who calls Warren Buffett an idiot is not paying attention. He has been building cash for something just like this. He is going to make 2 splashy acquisitions because the man's got cash. Good for him. The 10-year note is at a record low, 1.16. The 2 years below 1%. This is unnatural stuff. There's talk about the Fed cutting rates. There's actually a Fed governor, I think it was Powell, came out and said if this is declared a pandemic, which it still has not been, he could see cutting rates. The stock market is still pricing in crazy cuts just because they want the Fed to bail them out. Sorry, market. You've got to reprice your assets. You were overvalued. Take your haircut and grow up. Um, I think the Olympics is going to be interesting, right? Is it canceled? Is it delayed? That would be interesting. And then the last thing, just like we're watching housing, this could have an impact in the job market. I think what you're first going to see is job openings disappear. Then what you're going to see is job cuts increase. So we're going to have to watch jobless claims. And this data is so sticky and so backward looking, we probably won't know for 30 days. But we've got to watch the job market, right? There could be some companies that don't have the cash to make payroll, right? You see some of these pictures of restaurants and theme parks and all these things where nobody's showing up all day. People are lighting thousands of dollars on fire. So we could really see jobs in some areas be cut. So we have to watch that, right? So first is going to be job openings. Job openings are going to disappear. Then we're going to see job cuts. Then we're going to see unemployment. Again, I'm still under the thesis that 2020 is just a messy year, and eventually there'll be a vaccine or the summer weather will kill it or whatever, and then we'll go from there. So in the end, do me a favor. We're close to 5,000 subscribers. If you could do me a favor today, and if you haven't already, hit that subscribe button. You've been watching this for over 16 minutes. Do me a favor, hit that. Also, if you can ask your friends to check this video out, right? We're talking about being calm, and if they like it, they could subscribe. I'd love to see if for the next 2 days we can add 100 subscribers. And for that, I need your help. Share this video with your friends. Share it with your Facebook groups. Ask your colleagues to join. Let's see if we can't get this to over 5,000 subscribers by the end of the weekend. All right, everybody. Hope that made sense. Take care of yourself and have fun. Bye.